Well, hello and welcome, Flat Earth traders. Let's get into trade 55, moving right along and pretty swift through all of these trades. Let's see how we finished. This was on EWG, and this was a trade exit. This one was stopped out. This was a little bit more than we wanted because of slippage. It's a pretty good lesson here when it comes to trade execution and how it happens. So we had this entered on the 18th of January. I believe it's a German EWG, is a German ETF. We shorted this because it was below the 13-day moving average based on our rules. 1% loss of risk was 1,590 shares at an entry point at $28.65. Based on our rules, it was pretty obvious. We were just going to go the $28.65 entry price, 2 ATR initially for the stop at $29.29, and then adjust it accordingly as it went lower. However, this one didn't really give us much time to make an adjustment as it turned direction rather quickly. Let's jump in the software and take a look at it. Moving into the software, folks, you guys can see that we ran into what we refer to in the business as slippage. And it is this guy right here. This is a gap to the upside. Now, this stop was originally at $29.29, and you can see down at the bottom here, we actually got this stopped out of all the shares here at $29.54. So a little bit more than what we expected to. Now that can hurt you, and that's what's so tough about stop orders when it comes to overnight and over the weekends, things of that nature. You are susceptible to gaps. Now this one did hurt us a little bit more than we wanted to, but once again, that's why we put these things in place. We don't really care. We're just going to move along to the next. So let's break down how we finished, and I'll cut you guys loose. So our end results on this ended up netting a loss a little bit more than what we wanted, about a 3% loss, or about $1,400 overall for our totals. All right, guys, that's it. We'll see you on the next trade. Bye, everybody.